Welcome to our discussion on cryptocurrencies, where we dive into why we actually need them, and what makes them different from the traditional money we all know.
I'm really excited about this topic. So, what makes cryptocurrencies, such a big deal compared to, say, the paper money in our wallets?
Well, it's like this. While traditional money is basically created through debt, like numbers on a ledger representing liabilities, cryptocurrencies, on the other hand, represent themselves. They use cryptography to
Right.
secure transactions, meaning the value is backed by math rather than the promise of a government or central bank.
That's interesting. So, instead of trusting a bank or a government to protect your money, you're trusting the system's math and technology instead. Yes?
Exactly. In traditional banking systems, trust is a huge component. But with cryptocurrencies, think of it as an attack on that central authority. Bitcoin, which was introduced by Satoshi Nakamoto, literally paved the way by letting two strangers exchange value directly without needing a third
Right. I
party.
get that.
It was really revolutionary, especially coming after, the 2008 financial crisis.
So, if I understand correctly, cryptocurrencies like Bitcoin, Dash, and Monero give individuals full control over their funds. But how does that work practically?
Well, it's like you become your own bank with something like Monero, for instance. Your transactions are private, secure, and untraceable. That means you don't have to worry about prying eyes or centralized control from banks or governments.
That's pretty cool.
And then you have options like Dash, which focuses on quick transactions and privacy too.
I love that idea, owning your own financial power. But isn't there a risk with that level of independence? Like, what if you lose your keys?
Right. That's one of the trade offs. With cryptocurrencies, you're fully responsible for your own security, which means if you lose your keys or they get stolen, there's no central authority to help you out. But still, the benefits, like quick, irreversible transactions, really push the boundaries of what money can do.
I see your point. And speaking of quick transactions, how do cryptocurrencies compare to traditional money transfers?
Great question. Traditional transactions, especially cross border ones, can be slow and expensive. Cryptocurrencies, fueled by blockchain technology, allow for almost instantaneous transfers. It's like moving money in a matter of minutes instead of days, and uh, they cut out those pesky intermediaries.
Yep, that's
This
what I've
rapid
heard.
transaction capability is one of the key benefits for businesses and individuals worldwide.
So, in a way, cryptocurrencies can really streamline international trade and personal remittances, right?
Absolutely, exactly. They not only lessen reliance on traditional banks, but also pave the way for decentralized applications, or dApps, which can operate without a single point of failure. This creates a more
Exactly.
resilient and adaptable financial ecosystem.
I imagine that this software driven, decentralized aspect of crypto is what appeals to innovators and tech enthusiasts.
Yes, definitely. And on top of that, there's this idea of programmable money, money that can be programmed to perform actions automatically. Imagine revenue sharing in real time or um, contracts that execute themselves
Yeah, that
based on certain
futuristic vision,
conditions.
right?
It really opens up a lot of opportunities for how we think about finance and entire business models.
But, I've also heard concerns about cryptocurrencies being too volatile. Should investors be worried about that volatility for everyday use?
That's a valid point. The volatility of cryptocurrencies is indeed one of the major roadblocks when it comes to mass adoption for daily transactions.
I get it.
Investors and users have to navigate rapid price changes, which can be a double edged sword. Great potential gains, but also significant losses if things go sideways.
And what about the notion of cryptocurrencies replacing fiat money? Is that something on the horizon?
Well, that's a bit of a hot debate. Cryptocurrencies and fiat money don't have inherent value by themselves. Their value is based solely on trust. With crypto, that trust is established via blockchain and consensus.
Yeah, that's
With
an
fiat,
interesting
it's through
contrast.
central banks. While some see a total shift as possible, balancing both systems seems inevitable for now.
So the future might involve a coexistence of both centralized and decentralized systems, right?
Exactly. Many experts believe that over time, we'll see more integration and perhaps even digital versions of fiat currencies issued by central banks. However, Embracing both can foster financial innovation while
Makes
keeping a
sense.
check on risks.
But I got to ask, isn't it a bit risky to rely solely on cryptocurrencies given their potential for fraudulent schemes and hacks?
Definitely, that's a legitimate concern. The decentralized nature of crypto means there's also a downside, like scams, rug pulls, and security
Yep,
breaches.
true.
It's crucial for both investors and everyday users to educate themselves thoroughly and never invest more than they can afford to lose.
It sounds like a balance must be struck between harnessing the power of cryptocurrencies and mitigating their risks.
Exactly. Striking that balance is essential. Companies are already experimenting by incorporating cryptocurrencies into their operations for easier payments and liquidity management. It's a way to gradually boost their internal knowledge and possibly gain a chronological edge when digital currencies become mainstream.
Got it. And speaking of businesses, I find the idea that crypto provides instant, secure transfers quite revolutionary. But can we really depend on them for large scale operations?
That's a bit of a double edged sword. On one hand, the speed and reliability provided by blockchain make for very efficient capital management. On the other, the inherent volatility and lack of government backing could deter some organizations from fully switching over. So some
Yeah,
businesses
that's a
might
fair
use them
critique.
for specific optimally controlled transactions rather than for all operations.
Understood. So there's potential for cryptocurrencies, but it's not a one size fits all solution yet.
Right, styling them as an additional tool rather than a complete replacement for traditional money works best for now. For example, programmable money in crypto can facilitate things like real time revenue sharing, a capability far beyond the traditional banking system's comfort zone.
That really highlights their innovative potential. And what about the global regulatory landscape? It seems pretty hostile in some areas, doesn't it?
Yes, regulations do add a layer of complexity. Many governments are struggling to balance the innovative aspects of crypto with concerns surrounding money laundering, terrorism financing, and financial stability. Countries like China have taken harsh measures against crypto activities, while others like El Salvador are fully embracing them.
Right, it's such a mixed bag. So, while the technology is advancing rapidly, the legal and regulatory frameworks are still catching up.
Exactly. These evolving regulations might shape how fast cryptocurrencies spread in everyday use, but they also could create a more secure environment for investors and users if managed well.
That reassurance is important. Let's talk a bit about the investment side. Cryptocurrency as an investment, to be precise. Given all the volatility and potential pitfalls, is it really a good idea?
Well, it's a high risk, high reward situation. If you view cryptocurrencies like traditional assets and plan for the long term, they could be a valuable addition to diversifying your portfolio. But it's crucial to do your homework, assessing historical trends, understanding the team's background, and being wary of scams.
Definitely a must for anyone considering venturing into crypto. And there's also the notion that over time, with proper regulation, stability might improve, right?
Yes, many analysts predict that as adoption increases and, well, more robust regulations are put in place, the overall market could stabilize. It
Yeah,
might,
that's
over
something to keep an
time,
eye on.
even lead to the possibility of cryptocurrencies rivaling or even partially replacing fiat money in certain contexts.
That really puts things in perspective. All in all, cryptocurrencies are not just about being a trendy digital alternative, they're about revolutionizing how we control and move our money.
Exactly, it's a paradigm shift, whether it's through enhanced security, faster transactions, or the innovative potential of programmable money. Cryptocurrencies represent a bold and disruptive change in our financial systems.
Indeed. I have to say, this conversation really clarifies that while cryptocurrencies come with risks, they also offer revolutionary benefits that could reshape our financial landscape.
Absolutely. It's all about balancing innovation with caution and being open to new technology while staying savvy about its limitations. Thanks for this great chat. Always enlightening to unpack these ideas together.
Right on. Thanks for the discussion. It's been a fascinating look into why we need cryptocurrencies and what they mean for the future of money.